You have a maximum concessional contribution each year. At the moment, it's $30,000. 5 years ago, when it was 27.5 or 25, whatever it was at that point in time, if you contributed nothing, you're able to go back and contribute the whole amount. Or if you only contributed 15,000, for example, you can contribute the difference between what you did contribute and what you could have contributed, which is how the catch-up works. And you can go back 5 years, correct?
Correct.
When you then contribute that money into super, so let's say that there's $100,000 of unused contributions, that goes into your super, then that becomes a tax deduction. 100% deduction.
100% deduction in this year. And so a lot of people get caught out. How do I go back and amend my tax return from 4 years ago because I want to claim the tax deduction? The tax deduction doesn't go in from 4 years ago. The tax deduction is in this year. It just gets allocated against your unused caps from previous years. It all happens automatically from the ATO. You have to just exceed this year's cap first, and then any excess, it's like a waterfall. It kind of goes back to that furthest year back in that 5 years, and then it slowly fills coming forward.
5 years back would be 2020 now. So once we go to 2026, you can't use 2020 anymore, right? You
Drops off.
So
Yep.
Ideally, you could potentially start looking at using the unused caps from each of those years so you don't lose the ability to use them.
Yeah, like I did myself personally. I think this came in 18-19 financial year. I think was the first year of the cap that you could use. And I wasn't contributing up to the cap then, but more recently I have. And so it was exactly that. I had to exceed whatever year that I used that. I had to exceed that one. I got from my MyGov report what was the previous year before. I just used up that number before it dropped off, and then I've slowly rolled it forward.
So you're not wasting it. So it goes in as a 100% deduction. So hypothetically speaking, you got a $250,000 capital gain event, of which you would pay tax on. But if you then have $100,000 of catch-up contributions, which you contribute into super, that $250,000 CGT bill might come down to $150. So you then reduce the tax payable by that $100,000, which could be $47,000 or whatever. If you get the discount, it's less.
Yeah. So if you had a $400,000 gain on the property, only half of it counts as income, gets you to $200. If you had $100 that you can put in as a tax deduction, then you're only paying tax on $100,000. You've made a $400,000 profit that you're only paying tax on $100,000 of. Now that money you've put into super is taxed at 15% of the super fund, but that's a whole lot less tax than you would have paid in your own name.